Well, hi guys, good morning and welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Monday morning, lots of news to digest. Global markets looking mixed, and of course, we have the all-important Jio Financial Services listing on the exchanges today, and lots of stocks to watch out for. And of course, we'll also be getting all your stock-related queries answered by our expert on the show. So send them in to us on our YouTube feed, and we will have them addressed. But before we do all that, let's take a look at the top headlines at this hour. Well, Wall Street ended mixed on Friday with the Dow notching its worst week since February. The Nasdaq and S&P 500 too ended lower for a third straight week. All eyes will be on Fed Chair Jerome Powell's Jackson Hole speech later this week, which could provide clues as to what the Fed intends to do with its future rate hike trajectory. Asian markets kickstart the day on a mixed note. China cut short-term rates by 10 basis points. That's lower than expected, while the 5-year rate is left unchanged. GIFT Nifty is signaling a very flat start for the Indian market. Oil clocked its first weekly loss in 8 weeks amid concerns over the health of the Chinese economy. Gold, too, ended with losses as the street is betting on the Fed keeping rates higher for longer. Reliance Industries financial services subsidiary Jio Financial Services will list on the exchanges today. The stock is currently trading under dummy ticker after price discovery valued it at 261 rupees 85 paise a share. The stock will remain on the FTSE indices while it will be added to the MSCI Global Standard Index from the 23rd of August. Lots of stocks to watch out for today. Titan has bought an additional 27% stake in online jewelry retailer CaratLane for a little over 4,600 crore rupees. The deal takes Titan's stake in the company to over 98% and values CaratLane at 17,000 crore rupees. Also in focus will be M&M after it recalls over 1 lakh units of XUV 700 over wiring issues, and Murugappa Group stocks also in focus after the family settles its dispute amicably. Well, let me get on board our technical expert for today, then Rajesh Palviya of Axis Securities joining in this morning. Good morning, Rajesh. Good to have you on the show. Fairly weakish cues coming in from global markets. GIFT Nifty hinting at a very mildly negative start for the Indian markets. Where do you expect the Nifty to hover this week? Bank Nifty, if you look at that, 7th straight day of weakness coming in on that index. Where do you expect that to head from here?
Good morning, Nandita. Yeah, so we are witnessing, sustained supply pressure in the market since last couple of trading session, and now Nifty slipped below to 19,400 level, which was very important for this series. But looking at the near-term data setup, 19,200 is having a major put concentration, which is likely to act as a immediate support area for this decline, which we are seeing in the market. We are trading almost near to 19,300 zone on the Nifty spot. So in today's session, 19,200 is very important level. One should keep eye on these level. If at all we doesn't go below this level, then there is a probability that there could be some pullback action we can see in the market in today's session. So 19,200 is the level where we are keeping eye. If it breaks that level, then possibly Nifty can continue furthermore downside, and then it may head further towards 19,000 level also. But as of now, the support levels are intact. So today's session is very important and critical for the Nifty. We are going to have contra bat in today's session with stop loss of 19,200. And in pullback, we are expecting again Nifty spot can move higher towards 19,350 to 19,400, which is the major call concentration supply area for the market. So we are playing for very small range. But for this week, we are projecting a range of 19,100 to 19,500 for Nifty with the mixed bias. On the Bank Nifty, it's again, trading near to 43,600, which is very important and critical for the Bank Nifty also. If it slips below 43,600, then it may show further more selling pressure, and then possibly it may go down to the level of 43,200 in the continuation of this downtrend. So for Bank Nifty also, one should keep eye on 43,600 in today's opening. If we hold those levels, then some pullback can be there in Bank Nifty also. And on the higher side, the major supply zone for Bank Nifty is at 43,850 to 44,000 level. The major short covering for Bank Nifty will emerge only a crossover of 44,000 level. If it crosses those levels, then only we can see a short covering action in Bank Nifty. And for Nifty, for 19,400 is the key level. If we cross those level, then short covering action will be there in the bank, in the Nifty also.
All right, those are the levels to watch out for on the Nifty and the Nifty Bank. With that, Rajesh, hold your thought. We'll come back to you and discuss some specific stocks with you. But let me also get on board our next guest for today, Ajay Srivastava of Dimension, Corporate Services, joining in this morning. Good morning, Ajay. Good to have you on the show.
Good morning.
As always.
Thank you very much.
Before I talk about the markets, the big cue today will be, of course, the Jio Financial listing on the exchanges. We've seen Jio rather create ripples in the telecom space when it made an entry. Do you expect Jio Financial to bring about the same kind of disruption in the NBFC space as well?
I don't think so. I think, luckily or unluckily, let's put it this way, telecom was a regulated product in the market and you had weak competitors. Unlike that, in Jio, what happened in Jio, here, Jio Financial, they're going to be the last player in the game. And the last player in a game which has almost 1,000 players. So they can think they can play disruptors, but I don't think they will be able to do it because we have seen also same thing in Jio. The premium mass of customers did not migrate to Jio. They're still with Airtel at the end of the day. So same is going to happen with, it's not easy for a financial services company to come up, establish a national presence, get this thing. You got entrenched people like Bajaj Finance, etc., sitting there with years and years of legacy in them. So yes, I think it's overhyped. I think at the end of the day, the entry is overhyped. And when we see also what happens to Reliance share price and the return to shareholders, that's minuscule compared to the rest of the market is. The retail business is 8% business at this point in time, 8% EBITDA business. So I don't think so. Jio can ripple the market because they still need to borrow money from the market. It's not that Reliance is surplus money. Reliance is net borrower. So when they borrow money to lend money, there's only so much you can do in the market. You can shovel capital in like a Reliance Jio, but you can't shovel capital and they don't have that capital to put in the financial services. So I doubt it very much. I think they'll have an equally a tough time trying to ramp up given the competition in the market and well-entrenched majors and the banks put together. So it's not going to be easy, right, as people think it's going to be. I think they had no choice but to enter it. But the point is, I think they will underperform by a fair degree in the first few years.
All right, that's the view on Jio Financial and Reliance going forward. But Ajay, let me talk about the markets now. Last time we spoke, I remember you saying that, it's time to keep your powder dry. But this time around, lots have changed. Of course, inflation has once again reared its ugly head. Of course, that's because of surge in vegetable prices. Then, Fed has also indicated that it is not done with interest rate hikes as of now. Given the fact that there is upside risk to inflation. FIIs have turned a bit cautious. We've seen selling come in and Nifty, of course, itself is 3.5% off its record levels that we saw back in July. So right now, would you say it's the time to go all in?
See, there is, go all in is a term which you use when the market is in serious positive momentum and positive fundamentals. At this point of time, I think the primary mission of investors would be to safeguard their profits and not to get into loss-making positions. As my preceding gentleman was there saying that, listen, market's going to be range-bound. People don't know where they're going. At this stage, to try to eke out big kind of return is not possible or difficult, let's put it this way. I think one needs to focus on specific just stories. And as I said, powder dry means always there are opportunities. Now, you already seen market was hit the peak, has given you opportunities to come back and start buying again. If you don't have the money, you're out of the market at the end of the day. But I still believe in today's market, loss minimization and avoidance should be the paramount guiding principle. It's not going to be the return. It's how you can avoid losses in the market like this, because losses can be sharp. We've seen lots of shares have corrected quite substantially. And therefore, the mantra should be this week is, you don't need to buy every day. You don't need to sell every day. But what you need to do is to protect your portfolio and avoid losses in a market like this. Market can go anywhere they want to go. That's their mind. But I think given all the dynamics, loss minimization, avoidance, I think should be the guiding principle in our view. And safeguarding your profits is the next guiding principle. Finding incremental investment in a market like this, sure, you can back up some stories, etc., which are emerging and lots of transactions are happening. But that has to be kept to the minimal. Fundamentals are telling us different, and what's happened to the India's August monsoon, and what happened to the Indian rupee at the end of the day. After the big banks in the world said Indian rupee will appreciate, guess what happens? The market changes the mind, rupee goes to the lowest ever historically. When rupee goes to lowest ever, you will import inflation, oil price goes up, and consumption basket goes down. So let's be real about the real market. Stock market can do what it do, but you as an investor, our suggestion, our portfolio choices is minimize losses. Don't take positions if you're not convinced just because something happened to the market. Stick around. There's enough money you made. protect that money first before you look at incremental mojo in a weak market.
All right, protecting capital, of course, would be key going forward, according to Ajay. Ajay, I want to also get in your thoughts on some of the sectors now. Metals as a pack, what would you advise investors to do, given the fact that we've seen China slowing down considerably? We've seen dollar index, in fact, at a 2-week high now. Would you say this pocket should be avoided at the juncture? And another pocket that I want to get in your thoughts on is the banking index. Banks have started underperforming. In fact, this year they have been underperformers. And, the incremental CRR move announced by the RBI as well could, be an overhang in the short term at least. So what are your thoughts on these two pockets now?
See, banking, to be honest, banking is an over-owned sector. At the end of the day, tell me one portfolio, one mutual fund, whichever classification of mutual fund doesn't have banks in it. So I think the problem with banking is that every single investor in the market over-owns the banking portfolio. So there is only so much you can do to add or subtract to it. You can't go into a big fund unless there is banking in the mutual fund at least industry. If you build up a big portfolio, 1 or 2 banks are there. All the institutions are invested in the banks. So banks have a problem of everybody is over-invested. I think so. Therefore, the real money-making ventures are where people are under-invested. You saw what happened to defense stocks. They were under-invested, now people went to them. You went to pharma stock, people under-invested, you went to them. So banks have a problem. They will have a problem next 1 year. They are over-invested, everybody, number one. Number two is the demand scenario. You see Q on Q is not the best for most banks. The demand of retail loan, RBI is looking at it carefully to see how they can do it. Incremental CRR, it came very late in the day. And I think RBI, literally the horse has bolted and they need to do something more serious about inflation as time goes by because they came in too late on the liquidity front. So banks I will avoid. See, metals, you have to be careful that metal is a story which you build up over years and not try to time the market because you can't be a smart trader to say, okay, steel prices up in China, I'm going to buy steel prices. It doesn't work this way. Metal, if you want to stick to it, I would stick to say, forget metal, stick to basic commodity companies who have to sell, declare dividends, and have zero debt. So our preference has been commodity companies more than just the metal companies. The metal companies are a lot more variables. Commodity companies have a lot less variables to worry about. But the key thing, again, I said is that when the market corrects, and they do correct, do you have the capacity to buy more shares and average down your price? Because if you are loaded up and you can't take an opportunity, I think it's a wrong sector to be in. Then you better be in the manufacturing sector. These are volatile sectors. They give you great runs of returns. They give you great markdowns, but at markdown you buy. So I would say more commodities than I think metal at this point of time.
All right, more commodities than metals and bank, of course, avoid at the juncture. With that, Ajay, thanks a lot for taking out time and joining
me. You're welcome. Have a good day.
This morning. Have a great day ahead. Well, with that, let's go back to Rajesh. Rajesh, since we were talking about banks with Ajay, I want to get in a query that we are getting on our feed. Nikhil Chauhan wants to know your thoughts on Karur Vysya Bank, whether one should hold it or sell it. Stock has been under pressure last 1 month, 10% down or thereabouts. In fact, over the last 6 months, it has gained somewhere around 18%, but off late has come under pressure. What would you advise him to do with this stock?
So most of the banking stocks are witnessing supply pressure, and now ICICI Bank is slipped below to its 50-day moving average. Looking at the near-term setup, some pressure is there on the pullback action. 980, 970 are the immediate supply zone for the stock. So until the stock not crosses above 980 level, it will remain under pressure, and possibly some more consolidation we can see in the ICICI Bank. But if we analyze the very near-term setup, stock is now trading near to its very critical and important support area of 940. If at all the stock slip below to 940 level, then possibly ICICI Bank can face furthermore, supply pressure towards the 920, 915 zone also in the continuation of this downtrend. So 940 is critical level on the downside. So keep close eye on this level. If stock not breaks below those levels, some pullback action can be there. So range bound behavior is likely to be there in ICICI. 940 to 980 is the possible range for the near term. On the breakout of 980, it may start showing some strength, and then 1020, 1040 could be the higher side target on the stock. But it may take time. Some consolidation we are expecting for next couple of weeks.
All right, that's the view then. But what about a PNB right now? Ashok Kandukuri wants to know your thoughts on whether one should hold on to this stock or exit at the current juncture?
So PNB is looking promising since last 4-5 week. Stock is consolidating in very narrow range, and after a recent run up, stock is holding about to its breakout level. Looking at the buying action in last week, also it quite encouraging, and we do expect that once the stock crosses over 65-66 zone, then PNB can scale up to the level of 72 to 76 on the higher side. So we are having bullish view on PNB. You can hold your position. Your stop losses should be around 58.50 to hold your long position on PNB. And once the stock crosses about 64-65 zone, then this may scale up to the 72 to 76 zone.
All right. I hope that answers your query. But I want to take up the next query. This one is coming in on Dilip Buildcon. Vijay Sarangi wants to know your thoughts on this stock. Now, this stock has come under pressure over the last few sessions, but over the last 1 month or thereabouts, it has clocked in steady gains. It has bagged recently. It has bagged an order as well for an irrigation project in Madhya Pradesh. How would you advise investors to trade into this stock now, Dilip Buildcon?
So we have seen a significant, downfall in the stock in last 1.5 year. Some recovery is taking place since last 4-5 months. But still, if we analyze the short to medium term setup, stock is still in a bearish zone for short to medium term setup. Until the stock not crosses above 350 zone on a closing basis or on a weekly or monthly closing basis, it may remain under pressure. So whatever pullback we are witnessing since last couple of trading sessions is meeting to the supply pressure on the higher side. So 340, 350 is the key supply zone on the higher side. But on the downside, the immediate support area based on the near-term setup is around 290 zone. So till stock holding 290 zone, some attempt towards 330, 340 would be there in the stock prices. So those who have bought for trading perspective, they can exit around 340, 350 zone because overall trend for the stock is on the bearish side. So sell on rise is the strategy. If you want to take some contra bet, then your stop losses should be on the 290 to buy this stock for trading perspective.
All right, that's the view on Dilip Buildcon. Hope that answers your query. But I also want to get your thoughts on the stock of the day, Gujarat Gas. It has hiked industrial gas prices by a little over 2 rupees, and this is the first hike after 5 straight price cuts in 2023. Stock has been under pressure. In fact, for the year as well, it is down somewhere around 7.5% or thereabouts. How should one trade this one now, Gujarat Gas?
So underperformance is there, series of low top, lower bottom formation is there. Stock is slipped below to all its important near-term, short-term, long-term moving averages. So trend is on the bearish side. Stock is now currently trading near to its critical and multiple supply zone, which is at around 445, 440 zone. So if at all stock slip below to 440, then this downtrend may extend further and possibly it can go down to the level of 420 also in the continuation of this downtrend. As the stock is trading now near to its multiple support zone, so there is a possibility that if its stock not breaks below 440 level, then some pullback can be there. But the overall structure is weak. 470 is the major supply zone. Until the stock not crosses above 470, one should remain on the short side of the trade. If you get any opportunity in the pullback, you can go short with stop loss of 480.
All right, that's the view on Gujarat Gas. Then very quickly, your view on Titan, given the fact that it has purchased additional 27% stake in Carrot Lane. Now, brokerages have come out with positive reports on Titan, but some of them believe that in the near term, it will be EPS dilutive, but over the medium term, it will be EPS accretive. How would you say Titan looks like on the charts now?
So it's a wealth creator stock. Long-term setup is bullish. Some profit taking was there in last couple of weeks, but still stock is holding about to its 50-day, 100-day moving average, which is clearly indicating that strength is there on the near-term, short-term basis. Also, some recovery is taking place since last couple of trading session in the Titan. So looking at the near-term, short-term setup, we are bullish and we expect that stock can scale up to the level of 3200 to 3250 in the short term also. So one can buy as well as hold their long position with stop loss of 29.50. Upside target is 32.50 on the higher side.
All right, just about enough time for one last query on the show. Then we have a query coming in from Sachin, wants to know your thoughts on Cyient, whether one should be holding it or exiting at current levels. Looking at the share price, I think it has not done much over the last 5 sessions, but over the last 6 months, it's up somewhere around 60% or thereabouts. How would you advise investors to play a Cyient right now?
So stock has delivered a very smart return in last couple of months, and looking at the near-term setup, some consolidation is happening, but overall structure is on the bullish side. Stock is holding above to its breakout level. So your stop loss should be around 1500. If it's not slipped below to 1500 level, then possibly again stock will attract the buying action, and possibly once stock crosses above 1600 mark, then it will resume its uptrend, and then on the higher side 1750, 1800 could be the possible target on the positional basis. So hold your position with stop loss of 1500.
All right, hold is the call on Cyient. Hope that answers your query. But if you have any queries and if you couldn't take it up, don't worry, send them in to us tomorrow and we'll try and take it up. But Rajesh, before I let you go, leave us with some stock recommendations for our viewers this morning.
So first stock is Bharat Forge. Stock is showing good strength. In the last week also, we have seen a good buying action was there. So we are projecting target of 1010 to 1020. Keep your stop loss of 950. Another stock is from Adani Group, that is Adani Port. A very strong buying action in last couple of trading sessions. Looking at the near-term, short-term setup, we do expect that Adani Port can continue furthermore upside from the current level, and possibly upside target is around 870 to 880. Keep your stop loss of 810. And the third stock is from mid-cap space, that is KPR Mill. Stock is showing good traction since last couple of weeks. And looking at the near-term, short-term breakout on the weekly chart, we expect that KPR Mill can continue furthermore upside towards 730, 740. One can buy with stop loss of 655.
All right, those are the stock recommendations coming in from Rajesh this morning. With that, Rajesh, thanks a lot for taking out time as always and joining in and sharing your thoughts with us. Well, with that, we've come to the end of this edition of Morning Trade. But of course, don't go anywhere, because coming up next is Opening Bell from me and the entire team that put the show together. Thanks a lot for watching. Stay tuned.
Long believed that the relationship between the United States and India is will be one of the defining relationships of the 21st century.
The bright spot of the global economy.
The growth rate for India, which is 6.8 in 2022. Let's not forget, this is one of the bright spots in the global economy right now, such a high growth rate.
The potential of India is enormous. And you have now a reformer, a radical reformer, who has the ability to transform it.
On the verge of a big transformation.
इस अमृत काल में हमारे संकल्पों की सिद्धि हमें आजादी के 100 वर्ष तक ले जाएगी.
A magnet for investment.
I'm actually incredibly excited about the future of India. I think India has more promise than any large country in the world.
The world is bullish on India. Money Control is bullish on India. Join the campaign. Tweet to us with hashtag MC Bullish on India.